This ETF has been quietly beating the QQQ and VOO. It is up over 30% this year and still going up. If you could own the ETF that has been outperforming the biggest names for the past 5 years, would you buy it? My name is Jake. I'm documenting my journey on growing my 100K portfolio to 1 million. Let's dive in. Everyone knows VOO and QQQ, but few mentions IYW. And it has been outperforming QQQ by 6% and VOO by 13% this year. IYW, iShares US Technology ETF, issued by BlackRock, uses Russell 1000 Technology Capped Index as a benchmark by holding basket of 140 different US technology stocks. And it rebalances every quarter to avoid over-concentration. This cap feature makes this fund very unique. This ETF cannot have one single company's weight more than 22.5%, and the weight of all of its largest stocks that makes up 4.5% individually is capped at overall 45%. Due to RS diversification rule. Basically, this fund prevents extreme concentration in just one or two mega cap stocks to be more diversified. Expense ratio for IYW is about 0.38%, and when compared to other ETFs like VOO and QQQ, IYW is slightly more expensive, but it's nearly the same. Let's take a look at the top holdings. Largest holdings are Nvidia, Microsoft. You get a ChatGPT exposure on this. Apple, Meta, or Facebook. You get a metaverse exposure. Broadcom, AMD, alternative AI semiconductors, Palantir, great AI exposure. Google, you're watching this video through YouTube, and Oracle, TikTok exposure. List goes on and on. I mean, look at all these great companies, right? We use most of their products and services in our daily lives. By owning IYW, you are essentially buying all of these great companies, and you use their products and services every day. So why not own all of them? Now let's look at some of the smaller positions. AppLovin. It recently had a pop going into S&P 500. DoorDash. I love DoorDash. Me and my wife uses DoorDash all the time. Reddit. Pinterest. My wife loves using Pinterest all the time for her fashion inspiration, dessert recipes, and look, DJT, Donald Trump stock. Whether you like it or not, it's a great political exposure. So what I like about this ETF is that although it's mostly concentrated in tech sector, but it got some communication, consumer discretionary and staples, financials, even industrial sectors. Okay, now let's look into IYW's performance. IYW has about 30% in total return year to date, outperforming the S&P 500 and NASDAQ by 6 to 13%. That's a huge gap. If I was all in on either QQQ or VOO, then I would be missing out on several hundred thousands of dollars difference over the decade. VOO and QQQ are both fantastic ETFs to own. Here's the thing. So there's this 90% intangible asset rule. Basically, in the past, sometime around 1970, value of company in S&P 500 was mainly driven by mostly tangible assets like factories, machinery, inventory, and land. But today, 90% of the market value of S&P 500 companies are now made up with intangible assets like intellectual properties, software, data, digital brands, and goodwill, or new business model relying heavily on digital platforms. And IYW is perfectly well positioned in this trend. The downside of being heavily allocated into tech sector like me is that it can be very risky. So when the market dips, usually tech sectors drops the most. For example, during the tariff turmoil in April this year, IYW went down 26%, whereas QQQ dropped 22% and VOO dropped 18%. But honestly speaking, everything was down at this time. However, IYW recovered a lot faster than QQQ and VOO. This is the game you're playing with when you're in growth stocks or ETF. Simple as that. But if you held through the downturn, in fact, this was the best buying opportunity to accumulate more shares at a discount, and that additional shares would have given you 70% rebound. This is why volatility doesn't scare me. I don't chase the daily price moves. I only track my progress towards my goal, 1 million. This is why I'm heavily invested in IYW. First and foremost, diversification. I don't need to overcomplicate investing. IYW holds the best top US technology leaders like Nvidia, Apple, Microsoft, and many more. I would love to own all of these wonderful companies if I could, but IYW have it all in one place, and it's much safer than owning single stocks. And I don't have to worry about picking which stocks to own. IYW has better long-term growth track records by outperforming the broad-based market index. Not only that, IYW has faster recovery rate. If the market dips, then great, I'll buy more. If it keeps going up, then that's even better. Regardless which direction market takes, it doesn't matter for me. I have 10-year goal to grow my 100K portfolio into 1 million. I'm just gonna keep buying and treat it like a long-term savings account because compounding never stops. This is why I'm all in on IYW. So what do you think about IYW ETF? Are you holding any tech ETFs or stocks? If you want to follow my 100K to $1 million journey, consider subscribing, give it a like, and leave a comment below on your favorite ETFs. I want to know. Thank you for watching this video.